presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the June 24th, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a magnificent Monday. Let's make sure we do all that we can do to have a terrific Tuesday. You know, I'll do everything I can during the next couple hours to teach you how to master the tools for trading. And that includes the tools of the mind, because when we master the tools of our mind, we begin to think like a strategist. And that's really important as it applies to really everything in life, especially trading. And when it comes to trading, we use tactics such as A to B equals CD patterns, Fibonacci expansion and retracement, Gartley and butterfly patterns, and of course, candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus on tactics only, you and I know that to really achieve our goals and dreams, we've got to always think like a strategist. Now, the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. And that's what I call Mastering Probability, my daily newsletter service available at TFNN.com, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. And that's not to say we don't incur losses, because losses are a part of any successful trading strategy. It's what we call spoilage. Just as running a household means throwing out food that has gone bad in our refrigerator. But to limit our loss, to control our risk, we always use stops. And that means we have an exit strategy, one that covers both sides of the trade, what's referred to as a bracketed OCO order. One cancels the other. This way, we can really measure our performance, what I call system expectancy. So today, folks, today and every day, let's do all that we can do to think like a strategist, because strategists, they will slay the tactician all day long. Let's take a moment. Let's review some of our tools. These are the tools I call belief systems to consider. And really, they're brought to us by others. Many of you folks have probably read some of Napoleon Hill's books out there. What I like is, how about this? He says, whatever the mind can conceive and believe, it can achieve. How about Steve Jobs? Steve Jobs left us with this thought. He said, your time is limited, so don't waste it living someone else's life. Think about that, folks. How about Albert Einstein? He went on to say, strive not to be a success, but rather to be of value. Robert Frost, he said, two roads diverge in a wood, and I took the one less traveled. And that has made all the difference in the world. How about Jeff Bezos out there? You got to love this. He says, hey, the common question that gets asked in business is why? He says, that's a good question, but an equally valid question is, why not? Does that sound like Jeff Bezos to you? It does to me. How about Henry David Thoreau? He says, go confidently in the direction of your dreams. Live the life you have imagined. I buy into that one every single day. And finally, let's take a look at what Harriet Tubman once said. She said, every great dream begins with a dreamer. Always remember, you have the inner strength. You have the strength, the patience, and the passion to reach for the stars to change the world. Folks, let's go change some worlds out there. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures off about 15 points. They're trading out at 16,824. S&P off about S&P futures down about 3, trading at 1950. NASDAQ futures up a half a point, trading at 37.95. Russell 2000 off a couple of points, trading out at 11.76. King dollar back about a penny right now, trading at 80.32. Not a ton of movement here in the currency market. Most movement really in the Great British Pound. Goldilocks, let's check out how hard currencies out here. Gold up $4, trading out at 13.22 and change. Silver up 11 pennies at 21.03. Light sweet crude basically flat right now, trading out at 106.11. Our call-in number is 877-927-6648. Feel free to give me a call, folks. Happy to take a look at your stock chart, answer whatever question I possibly can. If we take a quick peek around the globe, kind of flattish market over in Europe right now. The DAX is up 9, the FTSE's off 15. Green arrows across the board in Asia last night, although slightly. If you take a look at the Nikkei up 7 points, flat. Hang Seng up 75 points. That's 1/3%. And the Shanghai up about 0.5%, up 10 points, finishing out its trading session at 21.2972. So, let's start with our first question, because popping in the markets here this morning, we got Vertex Pharmaceuticals, VRTX, stage 3 trial. I think that's what is the I forget what ailment, what illness they're curing out there, muscular sclerosis or something along those lines. But in any event, the question was, is there anything that we could have seen technically? The email came in. Is there anything that we could technically have seen in the chart that would have suggested that, as a matter of fact, it closed yesterday at $66.61. Today it's closing at $99.60. Were there any clues out there? So let's go take a look at the chart. Let's go see if we can't find any clues out of here. Here's a daily chart for Vertex Pharmaceuticals. So let's take a look at it. Let's pull this back here. Now, Vertex Pharmaceuticals, yesterday closing out at 66.61. Nowhere near its session highs out here. Its highs, let me see if this is let me actually just change this to a weekly. Let's do that. I'll come back to the daily momentarily. Let me put this on a weekly chart, because I believe that today it's going to try to take out its highs. So its highs out here, they came as their high volume high? No. Actual high came in at the price level of the week of July 15th. It got up to 89.96 out here, so it's going to go tackle that. No real volume out there. Volume for the week was 5.9 million shares. If we take a look at what's going on in today's action, or what was going on yesterday, and answer the question, is there anything that we could have seen here that would have given us a clue? Well, the first thing is that last week, what we saw was Vertex Pharmaceuticals actually gap down. Had volume behind its gap-down move of 12 million shares. That 12 million shares was coming into its most recent swing point that had 6 million shares. It was also moving into a swing point back here on November 11th that had 12 million shares. So coming in, with similar type volume. What it was also doing, though, if you were to take a look at Vertex Pharmaceuticals, and you go back to the week of April 15th, 2013, that's when it had its real breakout session. 35 million shares to the upside. So the real breakout area, the real potential buy on this was really down around the bottom of that candle session. That's the weekly chart. That's April the 15th out here. In fact, let's go take a look at the daily chart. Let's go see where it actually broke out from. See where price came back to here. And the actual breakout inside of Vertex on a daily basis, where's the April 15th date out here? That's interesting. Why is it not showing up as a big volume bar out here? Well, it's not. That's odd. So I'll have to go back and take a look at the weekly. So I get here. Let me answer this question this way. If we take a look at the swing point, its most recent swing point, there's April 15th. Let's take a look at April 15th, 2014 out here. And if we take a look at that swing point, 1.8 million shares. And as price moved down into it 2 trading sessions ago, 2 million shares. So still coming into a swing point with volume. The answer to that question is no. There was really no clue inside this stock chart that I can see from a buyer-seller standpoint that would have been able to have given an indication that, because you would have liked to have seen it actually test the swing point with lighter volume. That means the April 15th area. The swing point there goes from a high of 63.97 down to a low of 59.79. You would have liked to have seen it test the bottom of the swing point, test it with lighter volume. Hey, even if it tests the top of it with lighter volume, okay, there's a potential, there's a possibility. But otherwise, no. So Vertex Pharmaceuticals is going to be taking out its swing point high. I'll assume it's going to be doing it with volume. So the next question begs, hey, where is this likely to head to? Let's go take a look at it and see if there's an A to B equals CD, and there is. And if we take a look at this, so if it's going to take out its B point with volume, first let's go take a look at what that would be. Your A point would be coming back here to the price area in 2012, right around, looks like the low maybe was November, the week of November 26, 2012. The B point is going to be the swing out here from July 15, 2013 against the weekly chart we're looking at. The C point is going to be the low down here on April 14, 2014. No, the high volume bar came all the way back in April 15, 2013. I must not have looked back far enough. So the B point looks like it'll probably be taken out with volume today. It says it actually has a price projection now of about 111.31 out there, 111.31 to maybe 125.32, and that was on Vertex Pharmaceuticals. Certainly going to be gapping up here at the moment, at the open, and as long as it can hold those highs, that is the price projection on that baby. Let's go take a look at the futures market here. Let's go see what we've got going on. Let's take a look at if you're watching us on Tiger TV and you're watching my screen out here, and I hope you are watching us, because you can watch it on your mobile device by just simply going to the home page at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on the upper right-hand side. Go ahead and click on that. The show will stream live. You'll be taking a look at my chart here. My chart, the upper left-hand corner, it's the daily chart for the S&P futures. Upper right-hand corner, the daily chart for the Dow futures. Lower left-hand corner, the NASDAQ. Lower right-hand corner is the Russell 2000. When we get back from this first breakout here, we'll go take a look at the daily charts of these futures contracts. We'll take a look at their resistance levels, their support levels. We'll try to figure out what this market wants to do. We'll be right back, folks.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow futures off 12, S&P off a couple of points. Let's go back. Let's take a look at the daily contracts out here for the futures market. I think the one to really focus on here today, probably the Russell 2000 futures. Now, it's a resistance level. It's market profile, unfair high, right around 1175.40 out here. Again, I've got about a 10-minute delay on the data feed here for the Russell 2000. Of course, I'd have a delay feed here, anyways, just simply because of the new symbol that I have to create in order to be able to properly connect the futures contracts, stitch them together in order to be able to obtain the proper market profiles out here. So, and the reason why I say that it's an important area to watch is that the Russell 2000 is the only one above its daily unfair high, above its daily resistance area out here, and it's been above it ever since the trading session of June 18th. Prices come back and tested it. Tested the following trading session on June 19th. Rejected that area out here. So we probably get their lead with regard to the markets from the Russell 2000. So any move today back below, not at close today is really what I should say, below 1175.40 really suggests that price then moves all the way back down to the bottom of its support area right around the 1149-ish range. So I think the Russell 2000, one for us to be on the watch for today. The reason being, if we take a look at each of the other daily contracts out, let's take a look at the NASDAQ futures. NASDAQ futures actually here on a daily chart, trying to create the one continuation pattern that the Japanese candlesticks provide us with. There are some other ones, but the real continuation patterns referred to as either a rising or a falling 3. In this case here, it would be a rising 3, and that's using the candlestick here from June 18th. June 18th, this little wide-ish type body candle, and then the following three sessions out here, last 3 days, just trading within it. Any close above the actual, sometimes people use the highs, sometimes people just use the close of the session. I prefer to use the close, the body of the candle, because the body of a candle is truly the essence of price out there. The wicks of a candle, are nothing more than the extreme emotions during the trading session. The close is 37.95.75. That's the number to be watching inside for the continuation pattern. And since it's so close to its unfair high, its resistance level, which is at 37.99.50, and that's where price keeps bumping its head against, unable to close above it. If it did close above it today, that would be bullish. If it can't close above it, that would suggest moving back and testing the 37.62 area. That is inside the NASDAQ future. So we've got just really a real consolidation here, neither a breakout or a breakdown to either side, just simply a consolidation here. Now, what is occurring, though, is prices moving somewhat higher and doing it on less relative strength. Never a good sign, but it can resolve itself by continuing to move higher. That's on the NASDAQ. If we take a look at the Dow futures out here, let's go see what they're doing. Dow futures, well, that's the Russell 2000. We already looked at that. The Dow futures, we'll put the Dow futures up here on the screen here. The Dow futures have, yesterday they tagged their resistance area, their unfair high, 16,889. That's still what is in place here today. So the Dow, in order to really break out, needs to, on the futures contract, needs to close above 16,889. Otherwise, suggest a test of 16,769. And that's really the number to watch here today. Because if it closes below 16,769, that'll be offering a lower price, a retracement to come. You might say, hey, where's that retracement? I would say we just come off of the swing point back in May 20th, 2014, up to the high from yesterday. That's what I would use. And, didn't mean to do that here. And I also didn't mean to do that. Let me try doing this one more time out here. Let's grab that. There we go to yesterday. Let's get there to yesterday. There we go. Okay. So the retracement, that dead cat bounce takes you down to 16,653. So if it breaks 16,769, look for 16,653. I'd have to say if, in fact, it breaks that level of support, you're looking at 16,495 as the area that it would want to move to. Let's wrap this up. Let's take a look at the ES minute. Let's look at the S&P futures contract. Let's go see what it is doing out here. Right now, yesterday, forming a little doji candle and doing that, making a higher high, doing it with less relative strength. Again, never a good thing to do. Finding resistance at its unfair high, 1954.75. If it can close above 1954.75 today, that would be bullish. Otherwise, it offers a move down to about the 1934 level, its level of support. That's what's going on in the daily contracts for the futures contracts. When we open up the show, we were looking at Vertex Pharmaceuticals. Hey, was there any place where we could have identified maybe a buy on it or not? Take a look at what do we got? I got the gold contract up on my screen out here. This is a 10-minute chart. You know what? After the market opens, let's come back to the 10-minute chart. We'll look at Goldilocks. We'll look at Hi-Ho Silver. We'll take a look and see if there are any clues here for a real short-term trader and how they could use the relative strength indicator and some volume bars to make some trading decisions. We'll be right back, folks.
It's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow down 20 points, trade out of 16,917. S&P off 3 at 1959. NASDAQ Composite up 2 at 4370. Russell 2000 off a 1.5 at 1183. NDX 100 up 4 points. New York Stock Exchange off 18. Lead the charge. The upside, you've got Vertex Pharmaceuticals up $31, up 47%. That is putting some juice into the IBB, the NASDAQ Biotech ETF. That's up $4 and change, on nearly $5, up almost about 2%. Tesla up $4, up 1 6/10%. The junior miners, the JNUG, up 3.5%, up 96%. JD Communications, JD, the ticker symbol, up 2.5%. Facebook up 1%, up 83 cents. You've got Las Vegas Sands up 65 cents. Leading the charge to the downside, www.web.com, 14% down $5. C-Trip Communications, CTRP, down 6% this morning. Shire PLC off $3 and change. Not Offshore, down a couple of bucks. Lorillard down $1.83. Diamondback Energy, FANG is the ticker symbol, off $1.40, down about 1.5%. GW Pharmaceuticals up $1 as well. Our call number is 877-927 6648. Yeah, I mentioned let's take a look at silver. Let's take a look at gold. Let's take a look at a 10-minute chart out here. Let's take a look at, we got gold up first. Let's look at gold. Now, the chart that we're looking at here is a 10-minute chart. And a couple of different things out here. Number one, we saw gold make a little bit of a high out here this morning at about the time frame of about, looks like right around 7:10 or so, 7:10, 7:20 on a 10-minute chart. It was making a higher high. That's and what I'm looking at here is I'm looking at this little upthrust candle that had volume in it. That's really another candle we'll come back to, and that was at about 440 to 450 on a 10-minute session out here. That's when the price of gold got up to 1326. Makes a higher high coming in at the time period, and the price point is 1326.60, makes a higher high, does it on less relative strength. Then we see a pullback. What kind of pullback? Well, let's go take a look at retracement levels. Let's come from our swing point low down here at about 3 o'clock in the morning, June. That was this morning here, up to the high that was put in. You're going to see, well, it wasn't completely a 0.618 retracement. It was close. The 0.618 retracement would have taken it down to about 13.19 and change, but actually got down to a price point of 13.20, so not too shabby out there. What we'll also notice is that price here was in the, as you can see, was certainly in the overbought range, so an indication that price would go ahead and move a bit lower. Now, where did it move down to? If you take a look at that volume bar out here, that volume bar, we just referred to it, that was one that took place 440 to 450 earlier this morning, the low of which was 1321 out here. As price pulled back this morning, pulled right back into it, did it with lighter volume. The volume on that bar, by the way, that was, what's that, where's my volume? 3,800 contracts. No, I'm sorry, it was 5,100 contracts, and it was pulling back with 2,100, pulling back with 3,400. One final pullback with 2,500. That took place here at about 9:10 this morning. So that is a area of support. If that area of support fails, then you're looking for price to pull back. We take a look at our next volume bar as we pull things back. It takes us right back here to the trading session of June 20th. June 20th, we had 10,000 contracts. The price range there, the high is 1320. The low is 1314. So 1314 would become your ultimate support level to be watching for gold. Gold needs to hold that area because once price gets below that, all of those folks that were long were likely wrong out there. Of course, the top of that bar is also what acted as support here this morning, the high of which is 1320.40. So it does have some bullish friends out there, but those are the areas you want to look at. That's on a 10-minute chart, 1314. Now, if I switch over, because I'm going to, let's go take a look at gold. Now let's go take a look at its market profiles. The market profile lines you saw on my chart out there, those were not correct, just simply because I didn't stitch together the contracts properly out here. So this is really what you want to be paying attention to. Now, let's look at some longer-term time periods out here. We went to a 10-minute chart. 10-minute chart, actually. Let's do this. Let's put up the 10-minute chart out here. I'll eventually get it out of my system. If we take a look at its market profiles out here, it says 1320.70 is important on a very intraday, very short-term trading time frame. That says that should be a decent support level. Anything below that on a 10-minute time frame on an ultra shortish trading style time frame, you would not want to be long out here. The 30-minute chart's already given you a little bit of a clue because it's below its market profile level of 1320. Two out here, again, these are ultra short-term time frames that we are looking at. Let's move it up a bit. Let's move it up a notch. Let's take a look at the 120-minute chart. 120-minute chart says that the eventual support out here, first level that's going to be tested, 1319.20, and then the ultimate support level on the 120-minute time frame, 1312.20. So that's what you should be looking at inside of Goldilocks. If we come back and take a look at silver, let's do the same thing out here. Let me come back, and we'll come back to the current contract. We'll take a look at the 10-minute time frames. Let's go see what was going on inside silver this morning as it was moving back. Silver moving back all the way to the bottom of its breakout area. That breakout taking place here right where you see the volume. If you take a look at the accelerated volume on my chart out here, you can see that silver was breaking out right from the lows of about $20.93 out there. You had volume on that bar, 927 contracts, 1285 on the next session. The pullback here this morning was with volume. That was with 1,347 contracts going into 1285. So that's kind of interesting. That it held, most certainly held, formed a little bit of a hammer candle out here. Not a little bit, formed a hammer candle in that session from 9 to 9:10. But coming back with some volume really suggests that, you know what, the lows of that should be tested again here in the not-too-distant future. That is the message of its 10-minute chart out there, and that was on Hi-Ho Silver. Let's go check out some of these stocks that are moving today. See what we've got. So we took care of Vertex Pharmaceuticals. Let's look at the IBB. Let's go see what the IBB is doing, what it's up against here right now. It's trading out at 257.78 on its daily chart. It's in full-blown bullish mode out here. The full-blown bullish mode, that is saying that this thing, let's go take a look at its retracements now. Let's go take a look at this thing moved down big. But let's go take a look at retracements out here. Retracements coming from the high February 25th. Oops, that didn't work real well. Let's try that one more time here. There we go. So coming from the high of February 25th down to the low on the trading session of April 15th. And you can see that looks like its next target on its elevator move to the upside here is the 0.786 retracement, 260.87. Now, 260.87, that's where this thing really began to fall off planet Earth here, or really planet chart. And that was the high. That was the high of March 21st. That's where we saw volume really pick up to the downside. If you're looking at my chart here and watching us on Tiger TV, so that is and volume. You're coming in there with much lighter volume. That says that 0.786, the 260.87 level. The actual high of that trading session was 260.30. So somewhere in that range is where the IBB ought to run into some type of resistance out here. If it gets above that level, though, if it gets above 260.87, volume or not, that says, okay, I may go all the way back and make a 100% move of a move and get all the way back to the swing point high from around February 25th, somewhere in the 275.40 to 270.59-ish type area, and that is inside of the IBB. That's what the daily chart gives us. Let's take a look at some clues here. Let's look at a longer-term time frame, intermediate-term time frame. Let's look at the weekly chart. Let's pull this back out here. The weekly chart now all of a sudden starting to get towards its overbought condition. You can see when it was making a low back here the week of May the 7th, you can see how it had traveled down towards its oversold level. Actually, it got down to RSI reading of 41, so that was not an indication. You need to get down closer to the 30 range out there. Nonetheless, it is moving up towards the 70-ish area where it begins to get into a overbought type zone out here. Let's look at the volume, though, on the weekly chart. What's interesting here on the weekly chart is it's already trading above. Its real volume that it should have had trouble with was on the weekly basis of March 24th out there. That's where you really saw volume, and it's well up above that area. So what we have to watch for, what you should watch for if you're in the IBB or short the IBB, is you see that on the weekly chart here, the 0.786 retracement happens to line up with the actual swing point high, which is the week ended February 24th. So the low out there is 260.97. Volume there is 8.5 million shares. Last week moving up with 4.9 million shares, so moving up with lighter volume. Nonetheless, if it tags and it closes inside 260.97 and 260.87, remember that is the 0.786 retracement. But if it closes inside 260.97, that says, hey, I want to go test the highs out there. That's what the weekly chart would be suggesting to us, and that is inside of the IBB. Let's take a look what else we have moving here. You've got Regenerate Pharmaceuticals. That's having some fun. I think we took a look at that yesterday. Let's look at something we have not looked at. Let's look at Google. Let's look at Google. It's up $4, up 0.75% out here. I don't know that I've got enough on the weekly chart. I certainly don't have enough data. Let's switch over, take a look at the daily chart out here. Ever since the reverse split, yeah, there's enough. Not enough data for me to really pay attention. What I can tell you is that Google is all the way back into its swing point from April the 2nd out there. That had volume of 146,000 shares. Today or yesterday, you were up with 1.5 million shares. Yeah, see, I don't even know that volume is really right out there on that trading session. Let's just let's not pay attention to Google as we speak here. We can look at Netflix, so that's up $3.89. So we've got enough data on Netflix to see what it is doing. It's got resistance here. Its next unfair high, that is at a trading level of 450.82. Ought to run into some resistance there, maybe, because the swing point high looks like that is, let's see, the high on March 6th was 458. Even, Steven, that is the swing point high. Volume there of 1.6 million shares, and that area was tested and tagged with 2.6 million shares. So it says that even though it didn't close and get to the high, says it was moving to that swing point with volume. That's an indication that it wants higher price out there. And that is on Netflix. So it should really make a run for its highs. Netflix should try to tag the 458 even Steven area. If you do take a look at the lows that were formed out here, you can see it was forming a low with less relative strength on its way down. That began on the trading session here of March 31st. It finally made a low of April 28th, and when it did that, then you had a nice little bullish engulfing candle the very next session on April 29th out there. That was your signal that Netflix was done moving south. Now it's up there making a 100% move of a move. That is the daily chart for Netflix. Let's take a look at some things here. Moving to the downside, we've got, let's look at WebMD. WebMD, www.web.com out here, off 15% this morning. Other than a downgrade alert, I don't see anything else moving it, but it's moving it, and it's moving it with volume, and it's trading into a swing point with volume. This does not look good for WWWW. It's trading right now into the swing point here from April 28th. That April 28th swing point has volume of 759,000 shares, gapping down this morning into that level. It's already done 783, so this is going to take out a swing point on the way down with volume. Let's go see where this is headed to. Let's look for some other volume bars out here. So the biggest one that stands out, this is where it is headed to, and that is the trading session. Daily chart is what we're looking at, August 9th, 2013. The low of that bar happens to be $25.77. The high is $27 even, Steven. Looks like that is where it's headed to. I would venture to say, since it's not a wide-ranging bar, that it's really the low that it wants to go down and test out there, and that's at the 25.77 mark. Right now, trading at 29.16, and that is on web.com. Not looking good there. Let's look at the ICE Intercontinental Exchange. It's off $5 this morning, down a couple of percent. Let's go see what's behind its move out here. Let me pull this back. It's down with volume today so far of 164,000 shares, trading into 1 million shares. So kind of coming into, and that was on the trading session of June 12th. That was off of a bottom. So if it can't find support at 190.20, it ought to trade down into the area right around the 187 type mark. If it takes that out, 187. Let's pull this back further. Looks like it's had a couple of A to B equals CDs to the downside. Let's put this on a weekly basis. Let's take a look at the Intercontinental Exchange on the weekly chart. Let's go see what it shows, because this is going to have a larger A to B equals CD pattern for us to take a look at. So if it breaks below 188.91, that's its unfair low. But really what we're looking at here is it needs to break below the May 5th level, and that's at the price point of 186.90. Now, the volume down there on the weekly basis, that's what suggests that that is at least going to get tagged. That had volume of 8.2 million shares. If it can bust through that with volume, which doesn't look like it would do it this week out here, that spells the A to B equals CD to the downside. That is on Intercontinental Exchange. That would set up a A to B equals CD down to about the 160 level. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is always better when we're together. Dow is off 22 points. S&P down 2. NASDAQ is the real strength in the market, unlike the New York Stock Exchange. That is the weakness in the market that's leading the market down. It's off 21 points, off 0.2%. We've got minus 243 on the net declining issues out there. All that's needed today in order for the New York Stock Exchange to turn bearish is 135 net declining issues. We'll see how the day ends out here. It's too early to say, but those are the numbers to be paying attention to. Of course, other areas that we'll want to keep an eye on. We'll want to keep an eye on the VIX index. Let's go check in on that. The VIX index here just doing not too much, just moving sideways here. So that says that at this stage, it's traveling well below the 50-day exponential moving average, which is at 1234. The VIX is at $11.01 this morning. So even at this stage of the game with the New York Stock Exchange potentially looking like it wants to to get into the hands of the bears out there until the VIX index gets above the 50-day exponential moving average. The price action, price action retracement should be relatively mild, but of course we need to be paying attention to what the VIX index does. Again, we just use it as a gauge for is it above or below the 50-day exponential moving average, because that helps us immensely understand what type of price erosion might be taking place inside of the market out here. If we take a look at currency pairs, let's go see what's going on inside currency land. Let's take a look at let's go see what we have. I said the Great British Pound was the currency pair that was moving the most, so let's take a look at it. Let's take a look at the daily chart out here. Straight out at 1.698 as we speak right now. This is still in the process. Well, it has been in the process. If it can get back above its B point, this would be the first day here. If it closed below 1.6996, then it would actually get back below the B point, and that would say, okay, maybe you've got a complicated, complex A to B equals C to the upside. But if it can close back above that level, that brings into play the move to 1.722. Of course, what we can see out here is that the relative strength indicator, as price made its high, it got into that 70-ish range, 68.93 to be specific. That was on the trading session of June 19th. What we're seeing here is just simply a move sideways to work off a little bit of that overbought condition. That is in the Great British Pound. That is on the daily chart out here. Let's go see what else we have. Currency pair, Great British Pound, U.S. dollar in the weekly chart. It is dealing with resistance, still dealing with resistance, and that is the price level of 1.7042. Boy, it gets above that, and it will be, has the freedom to run. This is a weekly chart we're looking at, freedom to run up to the 180 mark. And, with the Great British Pound being, 10, 11% of the U.S. dollar index. In fact, speaking of that, let's just put up the U.S. dollar index. Let's go see what it is doing. Moving a bit lower. Now, the U.S. dollar index had broken through its descending trend line out here. That's the red diagonal line on my screen. Broke through it on the trading session of May 23rd. It did come back the next day to test it and reject it. Now it is continuing to move just slightly lower out here. That means it could come back and actually test the trend line, not a trend channel line, but the trend. Well, we can't see it's made the 0.382 retracement. So from low, meaning the May 8th low, that was out at 78.93, all the way up to the high that was put in here on June 5th. It's made a dead cat bounce to 0.382 retracement. So $80.25 is what the U.S. dollar index really needs to hold on to. Otherwise, that offers the opportunity for lower price out there. Well, folks, it is Terrific Tuesday, and as always, I really do enjoy being here with you, and thanks so much for joining us. Always remember this, folks. You have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Tuesday. I look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.